What's up, YouTube? Welcome to another exciting personal finance video where I'm talking about things like gold, silver, real estate, stocks, bonds, all that good stuff. Bunch of personal finance strategies. Guys, if you're into that, please subscribe to this channel, like the video, check out my website, My Road to Wealth and Freedom. Quick disclaimer, I am not a financial advisor, so please take anything you see here on this video or any of the strategies that I discuss or stocks I mention or buying precious metals and all that. Do your own research, consult with your own financial advisor. This is not financial advice of any kind. Okay, guys. Wow, it's been about a week and a half since I did my last video. I've been super busy. I've been trying to do more, but life sort of takes over. And what an exciting week it was last week. Of course, we had stocks come roaring ahead. Everything seemed okay, even for like the metals and that. It was all good. Then come Wednesday, we had the problem in the bond market, and everything just kind of sold off. Thursday, Friday, gold especially was hit pretty hard. I'm looking today. It's Monday, March 1st. Gold is at 1723.60. So it's kind of hanging right around that 1725 sort of support level. Silver is at 26.69, so it's definitely off the high. I think it was 28 early last week. Now it's down. Of course, the silver squeeze is still going on. It's hard to find physical. A lot of online dealers now are sold out. Premiums are soaring. And I honestly, in my last video, I had mentioned, I finally broke down and bought another one of these gold buffaloes, beautiful coins of 2021. I was hoping that today would be the video where I show you that. Unfortunately, I'm also in that same boat. My order's delayed. I don't know how long it is. They haven't even sent me like it's shipped. So I'm just sort of waiting on that. And yeah, I'll post a video once I get it. So yeah, definitely exciting times. Of course, first of the month, as I do at the first of every month, I track my financial journey quite closely. I usually do a net worth post on my website, My Road to Wealth and Freedom. You'll see the link in the description below. Yeah, guys, go over, check that out. February was a great month for my finances anyway. It's net worth up almost 24,000. I'll take it. I managed to buy 2 ounces of gold, and I think I picked up another 10 ounces of silver. So and of course I just paid off a whole lot on my debt, and that's kind of what I want to talk a little bit about in this video. It's really what is the foundation of building long-term wealth? And I've said it many times before. I'm diversified. I own some stocks, like oil stocks. I own index funds. I own all kinds of other stocks, dividend payers like banks and utilities and stuff like that. I also own a good chunk of physical precious metals, gold and silver. I own my own home, so I'm levered to real estate. Um, but and I guess I have a sizable cash cushion as well, which I think is pretty good. I see a lot of personal finance bloggers out there, and they're posting their net worths and it all looks really great, like, hey, wow, oh wow, you have a net worth of 2 million, 5 million, or whatever. But I find though, if you kind of dig a little deeper, a lot of these guys have huge piles of debt. They have a lot of leverage. That maybe they're. I know a few years ago it was popular to play like the credit card game. You can get, say, 20 grand, 0% balance transfer for 6 months, and then you get your next credit card. That was 0%. So you keep rolling it over and playing that game. Of course, investing the money into the stock market, which can have its own issues and problems, I guess. My point is, like, doing something like that early on in like an economic recovery is actually like it can be quite advantageous and really grow your net worth, and you can make a lot of money doing that if you do it right. And there's a lot of timing, there's a lot of risk taking involved obviously in that. You don't ever borrow money on a credit card and put it into the stock market. um, but there are certain times when it is a I'll say it's certain times it's advantageous to use debt to invest. Um, you can write off the interest as a tax deduction. There's all sorts of reasons why real estate. If you're in the real estate game, if you're owning rental properties, if you're a real estate investor, then you know this very very well. Part of the game is OPM, other people's money. You're getting cash flow. Your interest. You're able to write off the interest. You're highly levered to the real estate market in whatever area you buy in or whatever. Um, and that's fine. That to me, there's definitely a time to do that. The last financial crisis, 08, 09, coming out of that, it kind of made sense to do that. Interest rates were record lows. All this stuff seemed to be working for the economy, and it took a little bit of time. I just guys, I don't see that as being a really smart approach. I shouldn't have to say this, but I see so many people, um, doing stuff like this. Um, maybe I'm crazy or whatever, but my approach to building, solid net worth, has always been to minimize debt of any kind. In my mind, there's no good debt. That's why I'm focusing on like killing my mortgage. I plan to be mortgage free by early next year, early to mid next year, depending on what the bank will allow me to pay off and stuff like that. And I plan never to borrow money against my home. I'm not going to do that. I'm going to just save up and invest, kind of like what I do with my precious metals. I don't borrow money and buy gold and silver. Who knows what could happen? Like the day to day, you never know. I want to have my own money that I use to purchase investments, whether it's stocks or I fund my own retirement plan, like that type of stuff. You don't want to have debt. You don't want to be borrowing too much to do that, because if things don't go your way, if things kind of turn, um, it can hurt. You can lose a lot of money. Um, and I just don't feel that that's a safe way. So long story short, yeah, a lot of these financial bloggers and stuff like that, I see them out there. Yeah, they're like, oh yeah, I got this real estate, that, all this stuff, and on paper it looks really really good. I guess what I'm trying to say is that there's like you can just state your net worth, whatever. It doesn't matter. I could have $10 million in net worth if I take $9 million worth of, loans and stuff like that, and just go buy up whatever. That doesn't mean that it's quality net worth. Just like if you're going to analyze a stock, you're going to look at a corporation, you're going to look at their financial statements and stuff like that. You're going to look to see, what the stated enterprise value is. Is that really quality? Do they have I don't know, what do they have, like real estate? What are their factories and equipment worth? All of this stuff. What is their brand power to a degree? That type of thing. So I don't really buy into take on a lot of leverage, take on a lot of debt to like grow your net worth, and it'll all just be pretty and fine, because things, as we know in life, can turn very very quickly. A lot of debt is like long-term stuff, and the longer term you're planning, the greater risk comes or at least it should come into that plan. Most people take a 25, 30-year mortgage. You're on the hook for making those payments for 25, 30 years. They don't care if you are um, what is it? They don't care if you're unemployed, you lose your home, or like, what I mean? Like life, you could get sick. There's so many divorce, like there's so many things that can come into play that can ruin people's finances. Um, so that's why my approach to all of this, and as I've said in my earlier videos, no one really knows what's going to happen. I would say the market is pretty dead certain that we're going to see big inflation. Of course, central banks are warning us that they're more afraid of deflation. They don't care. They want inflation. I just took a long hard look at like where I'm sitting right now, and I just said to myself, deflation would definitely hurt me a lot more than inflation. But even inflation, if you have to renew your mortgage or whatever, you're going to have that higher interest payment. Especially if banks will start raising interest rates to so that they don't get killed. But yeah, to my mind, in no matter what the scenario is, being debt free, not having payments on a vehicle or on a home or anything like that. I mean, that's just totally the way to go. I shouldn't have to say it. It kind of goes without saying. Obviously, the less the more of your paycheck you keep because you're not making payments to someone else, the better off you're going to be. The more resilient your finances will be. The more flexible you'll be. The less risky it is. If you lose your job, if anything happens, you don't have a whole lot of overhead to cover. So that's kind of my approach. It's super cautious. It's super safe. I wasn't always this way. In fact, I used to, I played the game, man. I was, buying lots of stocks. I was investing. I had real estate, rental properties and stuff like that. And I'm sure there will be a time when I'm back into that. I just don't really see any value out there whatsoever. It kind of depends on what scenario we're headed for, and right now there's just no one really knows where we're kind of headed, and a few very smart people are saying, we're not headed for anywhere good. Charlie Munger was out there last week again talking about bubbles and crypto and the stock market, and it reminded him of the NASDAQ bubble and stuff, like, you know what I mean. These are smart people. That guy's like in his 90s. He's seen tons of different markets, and these guys know what they're talking about. And this market rally can carry on for quite a long time. But like I said, you don't want to be the last guy in on the day that it drops, and it might continue to drop for several years, or maybe we'll just get a significant crash like we did back in March. I don't know. I guess the smart, or no, I won't say smart, but the talking heads are saying, oh no, we're not going to get a big crash like we did back in March. But, things could just sort of wind down, like, trend lower or whatever. Of course, we saw all the chaos in the bond market last week. I mean, that was, not that big of a move, really, like in the grand scheme of things, and if you take a long view. But that was enough to upset markets. We had massive sell-offs. Gold's just getting killed. There's a whole lot of it's just risky, I guess, right now. So what I'm trying to do personally is just de-risk, pay down your debt, build some cash, own some precious metals. I'm still invested in my retirement funds and stuff like that, but I did cash out a lot of my stocks that I can access to pay off my mortgage, essentially. So and real estate's done very, very well. Like, I just can't get over where real estate's gone in the past year. We're up probably 25-30%. I'm in the suburbs, and we've done quite well. But at the same time, I don't know how much longer this is really going to go on for. I'm looking around, and every house is $1 million plus. Like, it's, people got to be able to afford that. Wages just haven't followed that trend, as I've mentioned in my other videos as well. So I just feel like this is kind of just all leaving like a bad taste in my mouth. I'm taking kind of a risk off approach. I still own my retirement funds. I'm still invested. You can't be all in or all out of anything, I guess is what I'm trying to say. But I did do quite well in the markets over the past 10-12 years. And there's a time to kind of get out, I guess, and I've just taken a long hard look at life, the sleep at night factor and stuff like that. I'm just like, you know what, I'm just gonna sell some of these stocks and pay off my mortgage, be done that in a year, and then I'll have tons of monthly cash flow to just invest and rebuild my investments and stuff like that. It's like I said, I'm not all in and all out. I'm just kind of making sort of a calculated calculated risk. My bet is that probably things aren't going to be so great in the market. It could be super volatile. It could go on a long downtrend, or inflation in the 70s wasn't super great for the stock market. The market really struggled. Now I have a lot of commodity exposure in my portfolio to things like gold and oil and stuff like that, agriculture and that. So I'm not too concerned if we're in that type of scenario. I feel like I'm probably still going to do quite well. And if we're not, I feel like I bought these things at such depressed levels that, even if they just go back to where they are pre-COVID, which is not really the greatest, it's not like we were in a commodity bull cycle, in 2019 or before COVID. I think we're going to probably I'll do well either way. So, I mean, that's, I guess, the kind of investments I'm interested in. I want to buy things low, obviously, and benefit from the value of those either companies or assets or whatever. So yeah, that's my approach. I'm going to do another video, guys, once I get that buffalo in. It's going to probably take a couple more weeks, a little bit longer than what I wanted. But again, like, secure your physical while you can. Gold sold off quite a bit. If you can find it, I know premiums have risen. And that's the thing. They're like, the price of gold, in a way, it almost doesn't matter. It's a paper price. You'll never buy physical for that. Physical is much more scarcer than, obviously, the paper that's out there in the market. And if the price drops, the premium increases because there's a run on it. It's scarce. It's hard to get. So it's like, well, when do you buy? If you wait for a price drop, the premium will essentially erase any deal you might have gotten from the price drop. So I don't know. I just try not to follow it. Like, I bought mine. I think I paid, I don't know, $30 or more for the buffalo I bought, and then the price dropped and all this stuff. Like, $30 in the scheme of things when you're spending almost $2,000 or whatever. I'm in Canada, so it was more than that, maybe 2,400 or 23 and change, something like that. It really, like, in the scheme of things, it's nothing. $30. The thing fluctuates that every single day. The point is, it's a long-term store of value. And I think everybody just should be owning a little bit of some physical gold and silver, just as a hedge, as a diversifier. So much of our wealth is tied into the existing system. Our stocks, our retirement plans, our real estate, all this stuff, our debt, everything. It's all tied into the existing system. And if that thing goes, I mean, you're going to want some different things that aren't in that system. So that's my main reason to kind of hedge out things with some gold and silver. I'm not going to go crazy on it. I'm probably not going to buy gold for a while now, unless it takes a big drop and premiums come down. I'm kind of sitting, I got, I don't know, I think 13 ounces, something like that. I mean, I feel pretty good with that. Like I said, I'm focusing now on getting my mortgage paid off. And I don't care. Like, I don't care if, maybe I should put all this money into physical gold bullion. But I don't know what I'll be able to sell it for. I gotta make this lump sum payment on the mortgage. I think it's in September, late August, September, something like that. I don't know when. Somewhere around there. Who knows? Maybe I could turn, that lump sum payment. I can make 10% on it, or 50%, but maybe it could go down that way. Like, you can't play that game. Is what I'm trying to say. And true to my approach of building strong, stable, quality net worth, I'm just doing the safest thing. I need that money to pay off this mortgage. That money will be there. I don't care if I earn any interest. I know currency's depreciating. It doesn't matter. What I owe on the mortgage is still what I'm going to have in that bank account. I'm going to have to pay it anyway. So it doesn't really matter the approach I want to take or whatever. I'm just kind of doing what's the safest for me in the short term. I want to protect my family. I want us to be in the best possible position that we can possibly be in. I don't want to have any debt. I'm hoping to kind of wipe out all the debt by early next year. So that's kind of what I'm thinking, and essentially kind of get back into average back into the market, and hopefully at better prices than we're at today. Maybe I might miss out on some gains or whatever, but honestly, I'll just say, like, I feel like I've already won the game. I'm in a really good spot. I'm really blessed to be in this spot. My family is anyway, and it's not. I don't need to. I don't need to hit the ball out of the park to win. For me, it's more about maintaining what I have, what I've worked hard for, what I've invested hard for over the past 10, 15 years. And that's what all of you should really be thinking about too. Play it safe. If you're getting these stimulus checks, why would you want to gamble on options and Robinhood and stuff? Like, maybe it's worked for you so far, but what if it turns? Like, why not put yourself in a better spot by doing the safe thing? I know that's probably a crazy idea, an unpopular idea now. It just seems like this is one giant. I'm in like this giant casino, and everyone's recklessly gambling. It's freaking me out. So, anyways, guys, I've probably gone on long enough, but I don't know if you could take a tidbit of some of my financial musings, and if it helps you in your life or whatever, I'm grateful for that. Hopefully this helps you guys. Let you know maybe a different way of thinking about your finances, rather than a lot of like the hyped up marketing gurus, and you know play it safe, take small but calculated risk, and really understand what risks we're all facing. It would be my words of wisdom to y'all. Okay, thanks so much, guys. Please like this video, subscribe to my channel, check out my website, My Road to Wealth and Freedom, where, like I said, I just published that net worth update. Please like, comment. I love the conversations. Let me know what you're thinking. What are you doing in your life? What's your strategy? Is it similar to mine? Is it different? You're like, where are you at? I guess it all depends on where you're at in life. If you're just starting out, you might want to take more risk. If you're kind of like me or sort of midway through it all, you want to start de-risking. You've essentially won the game. It's a matter of, keeping what you got, and not losing focus and losing sight of what's really important. That's all, guys. Have a good one.